In this video, I'm going to cover the whole entire market in terms of Dow Jones, NASDAQ, and S&P 500, including the economic calendar plus investor sentiment. We're at a critical point right now where we potentially could see a bounce. But at the same time, with the data points, it's kind of somewhat supporting it because we have inflation data that came out last week, CPI and PPI inflation data showing inflation is coming down versus what the Fed stated that potentially the current administration could have inflation increasing over time, which is not does not seem to be the case for the time being. Plus tariffs, potential pause, slow down with a 90-day, not potential, but 90-day pause for some countries provided some upside. We've seen some pull down after, but then we also see Apple potentially not being affected by the tariffs potentially. So there is some headwinds to go to the upside and bouncing off some critical levels. But first, I'm going to cover the economic calendar plus investor sentiment back to the technicals. In terms of economic calendar, be aware that on Friday, April 18th, the market will be closed for a Good Friday. And on Monday, April 14th, we have Philadelphia Fed President Patrick Harker speak, Atlanta Fed President Bosick speak. Then on Tuesday, April 15th, we have import price index minus fuel, Empire State Manufacturing Survey. Then on Wednesday, April 16th, we have U.S. retail sales minus autos, industrial production, capacity utilization, business inventories, home builder confidence index, Cleveland Fed President Hackman speak. Then we have on Thursday, April 17th, initial jobless claims, housing starts, building permits, Philadelphia Fed Manufacturing Survey. And on April 18th, for Friday, again, San Francisco Fed President Mari Deli speaks, but markets will be closed again for Good Friday. Then investor sentiment has increased on the bullish side to 28.5% versus last week 21.8%. Bear sentiment has decreased 58.9% versus the previous week 61.9%. In terms of the markets, if you look, I've shown this before with the upward trend resistance line dating back to 2010, upward trend support level dating back to 2010, and then upward trend support level for two major crashes dating back to 2010. This is looking at S&P 500. We are at the point where we potentially could be bouncing off of it. I'm looking at specifically ETF SPY, ETF for the S&P 500, closed at $533.94. And basically, if you look at the 1-year chart right about here, this indicates this line right here is an MAC line, indicates we're in a bearish or bullish movement. Yes, in a bearish movement for the time being, potentially crossing over to a bullish movement. And again, like I stated, bounced off technically the upward trend support level and heading up to the upside. The 5-year chart kind of shows support to that because with increased volume more on the buy side as well, and potentially crossing over to a bullish movement over time. The only downfall is in the long term, it looks like more headwinds could be pulling us down, maybe to the lower level, maybe to the 100-day moving average of the all chart, or to the major crash in general that collides with that, or to the 50-day moving average of the all chart, which is showing support at potential at the $464 price point, give or take. But for the time being, we are seeing potential upside coming in. And then the NASDAQ QQQ ETF is showing the exact same thing. If you look at the MAC line, bullish movement crossover, and then Dow Jones showing the exact same thing. 1-year chart, potential crossover to a bullish movement,